Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly market update for Cinco de Mayo. Happy Cinco de Mayo, everyone. This is May the 5th, and the market just closed, and we had a pretty interesting day today. We started out strong this morning and was strong most of the day. Let me get my Camtasia going here. Gap up overnight, strong most of the day. Notice we came right into this skyline here, touched it a couple of times, failed, came back up, touched it again, failed, touched it again, failed, touched it again, failed, touched it again, fell. Right off this, and actually took this skyline out. I'm not sure what was going on here. Someone said in one of the chat rooms that it was some potential bad economic news and all that kind of stuff, which is we should get used to that because we're going to be seeing that for a long time. One thing that I did notice here today, here's NYSE tick chart, and right at the open this morning, we're seeing extremes kind of all over this market. We had plus 1400. Normally, plus 1000, minus 1000 is, even that's pretty extreme. I have my alert set at 700 on the upside and 995 on the downside, but we had negative 1300 on the downside right here. So, a lot of extremes up and down, and this market seems to be trying to figure out itself, I guess is the best way to put it. But one thing I wanted to notice here, and we'll start with the S&P, get rid of that. Let's go to a 5-day chart. And it's always good to get a feel of how the market has been acting, the trailing 3, 4, 5 days, and then I start there and kind of work my way out. So if we look, we've been down here at 27.97. This is SPX, not SPY, and up as high as 29.54. We actually went to 29.65 in the overnight session in the ES. So some pretty good swings up and down. But one thing, if you notice, you see the green line right here? That's the 618 retracement off of the low. And this white line is the snow line that I keep referencing, that we might reach up there and touch. And we did, we got up to it here, but just really this is one day between here and here. So just briefly got through it and then immediately came back down. But so the 618's over here, and we got the 50% retracement here. And let me back this thing out even a little bit further and show you this is a 10-day chart, right? So the point is that we have been spending all of our time here, really, between the 618 and the 50%. That's for 10 days. So this is kind of just exaggerated chop. And if we go back out a little bit further, you'll see exactly what I was telling you guys on the last week's video. Here, let me zoom in. That between the 618 and the 50%, that's where we're getting all this chop. And this is, in my opinion, this is we chop and break to the downside, with this being target number 1. And of course we could break through here on the upside. This is that snow line I was telling you about right here. We could break through here, but I see many more reasons we should go down than up. And the third, I guess, thing, and maybe this is probably my number one scenario is we reach up there, tag this thing, and then we start working our way back down here. Maybe down here, maybe down here. All depends on, the virus and news and all the economic data that's got to come out and all that kind of stuff. Or, maybe we, maybe we kind of just continue to chop here like we're doing, trying to figure out which way we're going. Now we got the Fed, the winds at our back with the Fed and all that kind of stuff, right? I don't think that's enough myself personally, but we'll see. And the third scenario is that the market just says no problem, this thing is going to bounce, we've got a V-shaped recovery and all is well and we're off to the races. I think that's the least likely scenario. So this again is the S&P. You could say the same thing for all the indexes. In fact, if we look at the NDX, it's even more extreme, I guess, because we've been driven primarily. This whole market's been driven really, with big tech, and we've got a shift. We've had a shift from value to growth here, and primarily big tech's driving this. We took out the 50%, took out 618, now it's the 786, and we've got a fire line there. We took that out, so we could make one last little move up there, and then start to make our way back down here. Again, all these look the same, so I am treating this the same way as I have been saying, really since my target was here. And once we got here, I was saying, we're going to chop around. Here's my kind of range. I think we're going to break down here. I think the same thing. Nothing has changed for me. We do have payrolls on Friday. That'll give us, they're going to be bad. Everybody knows they're going to be bad, but that'll give us more insight. And as we get little pieces of economic data, in each day, and of course we're going to watch crude prices and so forth. But there is a lot of things out there that can throw a monkey wrench in this market pretty quickly. So be defensive, be careful, take profit when you can get it, and just trade much more nimble, be much more nimble than we've been in a long time. That's the way that I've been trading this, and it's been working very well. So with that is my trade, or not my trade of the week. I did that this morning, but that's my take on the market right now. And again, it hasn't changed from the last 3 or 4 weeks that we got this chop, and now we just wait. So again, monitor everything very closely, use tight stops, small size, and take profits when you can get them, and we will go from there. So I'll see you guys at the next update. Thanks a lot.